What's up, you guys, and welcome back to the Nick Knows podcast, where I'm your host, Nick, and I know things. Now, today, we're going to be talking about how to get you the perfect credit score for free. As a real estate agent, I work with a lot of clients, and depending upon their experience with buying or selling real estate, they may have a lot of knowledge about their credit score, or they may have absolutely zero. I can tell you how many times I'll ask somebody what they think their credit score is, and they just have no clue. Or they say, I don't know. Do I have one? If I do, what is it and how do I make it better? Well, here's the thing. Just like a report card or your grade in math, you have one even if you don't know you have one. So the important thing is to figure out where you're at and how to improve it from there. Now, when I start talking about credit scores, some people think it's some mystical number that these companies pull out of a hat just out of nowhere. But the truth is there is a system of how they come up with these numbers. And while some of it may be counterintuitive, if you follow the system, you can get your score to almost perfect in not very long. So first of all, we should just talk about what is your credit score. Your credit score basically is just how likely you are to pay somebody back if you borrow money. And these companies have a way of figuring out this number, and it's a number between 300 and 850. Anything over 760 is going to basically be the same, because at that point, you're going to be getting the best interest rates on cars, on homes. You're going to be able to qualify for the best credit cards, the best rewards. Those are all kind of the same after 760. So whether you have 760, 780, 800, you're still going to qualify for the same things. So then once people understand that they have a credit score, they want to know, how is this calculated? Okay, it's going to be a number between 300 and 850. But how do they come up with this number? What's the criteria? Just like a rubric in school tells you, hey, these are the things you need to do in order to get an A. These are the 5 areas that these credit reporting bureaus look at in order to come up with this score that they give you. The first one is your payment history. So how many times you've made payments on time and how many times you've been late on payments. This is the heaviest weighted category, and it accounts for 35% of your credit score. The second piece of the credit score is what's called your utilization rate, which sounds really fancy and confusing, but basically it's the percent of the credit you use out of the total credit that you are allowed. So for easy numbers, let's say you have a credit card that has a maximum limit of $1,000, then if you use $500 every month of that credit card, your utilization rate is 50%. The credit bureaus want this to be low, under 30%, ideally under 10%. They want to see that when you're given credit, you don't use all of it, which is kind of counterintuitive, because if you had $10,000 credit card limit and you're only using $1,000 of it, that would look better than if you had a $1,000 credit card and we're using the whole 1,000 of it every single month. And you're like, well, I don't need the extra 9,000. I'm only spending 1,000 every month. So why would I take out credit I don't need? That seems like a bad decision. It would be bad for my credit score, but it actually looks better to the credit companies because it's showing, hey, I could have this much credit and I'm still only going to use a small bit of it. The third category is the average age of your accounts. Now, this is an interesting one, but basically they want to see that you can pay on something over an extended period of time. So the older your average accounts are, the better your credit score is going to be. This accounts for 15% of your overall credit score. And again, this is an average of all your credit accounts. This includes all your mortgages, all your credit cards, car loans, all of that stuff. So it's going to take the average of that, and that's going to be the number it uses for your score. The fourth category that is used to create your credit score is how many different types of credit lines you have. So do you have a credit card? Do you have a car loan? Do you have a bank loan? Do you have a mortgage? The more different types of loans you have, the more you've been proven that, hey, I'm not only a guy that pays my credit cards, I pay my mortgage too. I don't just pay my mortgage and my credit cards, I pay my car payment. They're going to say, hey, this guy's good with money. He knows how to handle multiple bills, and he always pays on time, and he has different types of credit that he's working with, and that's going to up your score. This is 10% of your overall score. And the fifth and last way that they calculate your credit score is by how many hard inquiries you've had on your credit report. So a lot of times when you're applying for car or house, they will have to pull your credit, and you'll have to sign something authorizing them to pull your credit. And when they do that, what that means is they're doing a hard pull on your credit. So they're going to the agency and they're saying, hey, we want to know what this guy's credit is. And the reason that that looks bad is because it looks like you're going out trying to get a lot more credit. So one inquiry or two inquiries is not bad, but the more you have over a 2-year period, the more it's going to affect your credit score. Now, this whole category only affects at 10%, so it doesn't mean you shouldn't go out and get more credit cards or home loans or cars. Just know that when they pull your credit, it's going to affect it. And also, I tell my clients, when you're looking for a lender to buy a home, anything you have pulled on your credit within a 2-week period is only going to count as one inquiry. So shop around to different lenders to try to get the best rate, but make sure you do it in a 2-week period. That way it's only counting once against your credit and not every single time. Whereas if you do one now, one in 6 weeks, one in 2 months, then each of those is going to count as an inquiry, and it's going to affect your credit score more negatively than if you did it all in a 2-week period. All right, great, Nick. So now I know what my credit score is comprised of, but I don't even know what my credit score is or where I'm starting from or where to go from here. So what I'm going to do next is just kind of tell you how to figure out what your credit score is, where you're at currently, and then depending upon those 5 categories, what you see your credit score, how you can improve in each of those categories. So there are websites out there where you can get your credit score for free. I use Credit Karma, but there's other ones as well. You could also go to annualcreditreport.com and download a full copy of your credit report every single year. If you go to a site and it's trying to make you pay for it, just click away because it's free. So things like Credit Karma are going to show you your score, and from there they'll give you suggestions on what you can do to improve it. The credit report, annual credit report, is going to give you your actual report and show everything on there. That's going to give you a starting point. Next, what I'm going to want you to do is go through that credit report and see if there's anything on there that just is not true. Sometimes things get reported under other people's names, or some things, you may be on that you aren't on anymore, and it's still showing up in your credit report. So just go through and make sure everything on there is you and everything on there is accurate. If there's anything that's not, you can contact that company and try to have it removed. Now, if you go through your credit report and you're noticing that one of the things that's hurting your score is that you're not making on-time payments. Now, as we talked about, on-time payments is the largest chunk of your score, 35%, and that's going to be comprised of you making on-time payments. So if you see that you're making late payments and that's what's affecting your credit score, I want you to go and make those payments on time. And if you have credit card debt, that's okay. You just have to make the minimum payment in order to be considered on time and not late. So make sure you're at least making minimum payments across all your credit cards, and then you can start to dump, if you want to pay them off, dump into one. But make sure you're making the minimum on all of them, because if you just start paying on one and ignoring the rest, those are all going to report as late payments, and that's going to tank your score. And if you have a late payment, that's going to stay on your credit report for 7 years. So you definitely don't want to do that at all costs. Make the payment if you can, any way possible. Because if not, it's going to be 7 years before that falls off of your credit report. All right, the next section of the score that's really big at the 30% one is the utilization rate. And again, this is the percent of your overall limit that you're using. So if you have one $1,000 limit credit card and you spend $1,000 every month, your utilization rate is 100%. And again, they want that below 10 ideally, but definitely below 30% in order for you to have a good score. So there's 2 ways to go about this. You either start spending less on your credit card and spending in other ways like debit card, cash, that kind of thing, or you increase your credit limit. And there's a couple ways to do that. First, you can call your credit card company and see if they'll raise your limit. I know on one of mine, I can every 6 months just go online and without even doing a hard inquiry on my credit, they will raise it as a set amount every 6 months. So go in there every 6 months, do it, because that's going to raise how much your limit is, and that's going to lower your utilization rate. The other thing you could do is apply for more credit cards. It's a cumulative thing. So they look at your total amount and how much you use total. So even if you use $1,000 out of $1,000 on one credit card, if you have a $50,000 limit credit card that you're using 0 on, they combine all that together and they say, hey, he's only using $1,000 out of $51,000. That's good. So it kind of seems counterintuitive to go and get another credit card in order to improve your credit score. But you're basically just showing them that, hey, just because you give me this limit, I'm not going to use all of it. All right, the third part of the score, like we talked about, is your average age of your credit line. So this is where the key thing is always keep your oldest card or your oldest credit line open. So if you got a card like I did in college, that's kind of a lame card. It was an intro card. It doesn't have good benefits really, but it's free. Doesn't have an annual fee. It has a low limit. But I keep that card open because it helps improve my average age of my credit limits because it's my oldest card. So some people think, oh, I don't need that card anymore. I'm going to close that account. That's going to help my credit score because I'm getting rid of credit that I don't need, right? Or that's an old card. I barely use it. I don't need that. I have this new card I just got. But that's going to really affect your credit score. So what you want to do is keep that card open. Just buy like one thing on it every 6 months so that they keep it open and happy. But you want to keep that card because it's going to age your lease. For me personally, I cash out refied to my properties back in 2020, and I had mortgages on those for 7 to 8 years, and I didn't realize that was going to reset the clock on those credit ages. And so when I did that, the average age of my credit limit came down significantly because those two basically were averaging up with 7, 8 years, and then they went basically down to zero. Now they're slowly growing and we're fine, but it's just something to think about as you're thinking of which credit cards to get rid of. Always keep your oldest ones because that's going to help your credit score the most. The next part is the different types of credit. So that's, credit cards and then auto loans, mortgages. And this one, you can't really go out and get one, just for fun to help increase your credit score. This is, again, only 10% of your score. But if you're thinking about getting a car and you're not really wanting to finance it, it may be worth financing if the rate is good and hey, this is also going to help boost my credit score long term. And then the last section is just the number of inquiries. So with this, again, you can have one or two. And like the tip I told you earlier about getting the inquiries in a 2-week period only counts once. But basically, you just don't want to be applying for things over and over and over again. This could be hard, especially like if you're a tenant right on the bubble of the right credit score and you're trying to apply for a home to rent and you keep not being selected as the tenant over and over again and they keep having you run your score over and over again. This can kind of be detrimental. And so just be aware of that as you go into these different processes of buying a home or renting a home or buying a car, just how this works. And that way it will affect your credit score less. All right, last but not least, I just wanted to add a couple cool hacks that you can use for your kids and for yourself to help improve your credit score. So one of those things is adding an authorized user. So if you have a really bad credit score and your spouse has a good one, or if you just want your kids to start off with a good credit score, add them as authorized users on your account, or have your spouse add you as an authorized user on their credit card account. What this does is you'll be able to basically get credit for their good credit. So when they pay off their bill every month, that's going to show up on your credit report because you're an authorized user, and it's going to help improve your credit score. Now, obviously, you don't want to do this with somebody who's not good with credit, but it's somewhere if you're not able to even get approved for basic credit cards, this is a way to do that. We actually had to do this with my wife when we first got married. She actually had no credit, and so she couldn't even qualify for like a Kohl's charge count. So we had to go and get a card. I had to go get a card at Chase, and I added her as an authorized user, and that gave her a credit score, brought it up, and then she was able to go get cards on her own. The other thing that people don't know you can do is you can downgrade your card. So say your oldest card that you have, your oldest credit limit is a card you don't really use anymore, and it has a really high annual fee. And you're like, man, I know I need to keep this open, but this $400, $500, $600 annual fee is killer. I'd really not like to pay that. You can actually call a credit card company and they can downgrade it from whatever, platinum card you are to their base level card. That's usually doesn't have an annual fee. And that way you can keep your credit line links open, but get rid of that annual fee and keep the card. And that's something a lot of people don't know you can do, but you can, and it will help. All right, so we've demystified the whole credit score, what it means, how they calculate it, and tips that you can use to increase your credit score for free. Having a good credit score is basically a life hack because you're going to be able to get the best financing on cars, on mortgages, and have access to the top tier credit cards, which offer the best rewards. In fact, I use credit cards to travel for free. Check out my video on how I do that below. So if I missed anything or you have any questions, feel free to leave them in the comments below. I'd be happy to respond to your specific situation and see if there's anything that would apply there. Thanks for watching, and don't forget to like and subscribe.